يا لا 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 يا لا 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 يا لا 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 يا لا يا لا 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 يا لا 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 يا لا لا لا
chart to understand today. It shows us job growth in the United States, and over the course of the last year and a half, the job market has slowed to a standstill. The economy has no longer been adding jobs, and in certain months, we've already seen it begun to lose jobs. But the most important element behind this is that this was what the job market looked like before the war in Iran triggered an oil shock. If the job market was already on the edge of breaking with oil at $60 a barrel, what's going to happen with oil at $95 a barrel? Yes, there is potentially a ceasefire that is currently in the works, but the reality is that oil prices remain 50% higher than they were before the war started, and we have not yet felt the full economic impact that will result from this. We can take an educated guess at what's going to happen by quickly going back through history. We can adjust the price of oil for inflation to make sure that all of this is comparable, and if we add the US unemployment rate, which is another way of looking at the strength of the job market, you'll notice something quite peculiar. Rises in the price of oil actually often lead the unemployment rate. We can even shift the price of oil forward by a few months to see that it's a very good match. We know that oil shocks in the 1970s caused multiple severe economic downturns, but this also shows us that the rise in the price of oil preceded the 1990 recession, the 2001 recession, and even the 2008 financial crisis came shortly after a spike in the price of oil. Today, the jump in oil prices is comparable to 7 other historical episodes that we've highlighted here. Out of the 7, 5 were followed by official recessions as classified by the NBER. In the meantime, the US stock market has been bouncing back considerably over the last couple of weeks, despite oil prices continuing to climb higher.
Assalamu alaikum, brothers. Based on the employment market, I want to look at the dollar index and see what it's doing at this present moment in time. It's not a trade, and it may be more suited to the brothers who have been trading. Now, the bottom line is this is the US dollar index. So it's like DXY, but the key point is what I'm looking at is the dollar is currently at a major inflection point. Now, we've got resistance pretty much, and we acted as support. Now these are, each bar is equivalent to 3 months, so we've got 2 bars here, the last 2 months. I'm going to zoom into it so I can show you. So the situation is this: is this valid, this particular bar, or is this valid? Now, I'm going with the last one at this present moment in time. It is this one. However, from an opposite point of view, I do have this guy also into consideration. So I need further pieces of the jigsaw to identify exactly where it's going. Now, it could be easily argued from both point of views. Now, because of that, I'm not going to take on any aggressive trades. Now, from a weekly perspective, what I'm looking at is something, you know what, in fact, I'll show you on a monthly basis because this makes more sense. Now, from a monthly perspective, when we look at this situation, we could easily argue this is a bear megaphone pattern. So what that could potentially mean is that the market went down, we could argue to here, went there, we could see a drop there. But what I'm also worried about is not just a black swan event, a white swan event. A white swan is when we know there's issues in the economy, there's multiple domino issues. It's a question about which one falls first. So we're currently just waiting. It is also at the same time multi-dimensional, and there are major factors in place. So we need to be careful. Extremely high volatility in the markets at this present moment in time. We could argue, we could simply put and focus on this for now, and let's see how it reacts, something like this. But ultimately, my bias at this present moment is to the upside, and let's see what it does. So accordingly, I'll be giving trades, but if the trades do not set up and I'm not ready, I'm not going to force a trade. Alhamdulillah, we made some fantastic returns on the trade that I sent over to you, brothers. So let's see how it goes. Let's take it easy. Let's chill. There's no need to rush. There's no pressure on anyone. Let's chill out, relax, and let the market come to us. This is the most important thing I want you to learn is patience, sabr. If we have sabr, inshallah, we will do well. Jazakallah. Assalamu alaikum.